Good morning. My name is Andrew Dalrymple, and I manage the Aubrey Global Emerging Markets Opportunities Fund. We have a joint venture, as I think the introduction said, with LarrainVial, and I'm very pleased to be here in Chile this morning. The weather is a lot nicer here in Chile than it is in Scotland, I can tell you. Obviously, not being a Spanish speaker, I'm not sure entirely what you've just been hearing, but I suspect it wasn't very positive. Probably mainly not very positive about China. And I would endorse that view very much. We run, as I say, an emerging market fund, which is focused on the consumer in both these countries. They are the biggest markets for us, extremely important, therefore, for us. And it is our job to find opportunities to try to make money for our investors, no matter what the conditions. And it is possible, believe you me, it is possible, even when things are not very good. But I've got a small presentation about what we do here. I think I pressed the wrong button. Is that one forward? Oh, that's forward, sorry. I've got a small presentation here about what we do and how we do it. And I want to start by just telling you that the emerging market consumer opportunity, and as I say, we focus on consumer stocks, is incredibly exciting. There are an enormous number of people, more than half the world's population live in Asia and emerging markets. And by and large, they work extremely hard, they save very hard, they're very industrious, they're very aspirational, they want to get up in the world. And it's that dynamic that we're playing as investors in the emerging market consumer fund. We do it because we believe very, very strongly that it is the most consistent theme in emerging markets. People are basically trying to get into a better place for themselves and for their family. It's a normal human aspiration, and it's a powerful driver for the companies that we invest in. We are basically investing in any company which is making life better or more convenient or more comfortable for their customers. And that's a very good starting point, we believe, in investment. So how do we go about it? First of all, this is a very simple S-curve of the way demand works. And basically what I'm telling you here is that when you're poor, your emphasis is on basic necessities of food, of drink, of clothing, of a first house, first car, first motorcycle. And so down at the bottom of this graph is India, with a GDP per capita of only 2,500. That is what we call the sweet spot for us as investors in India. Whereas at the top of the chart, you can see Korea and Taiwan, which are not really emerging markets anymore. They're mature economies. And halfway down, you've got China and Indonesia. And the point is that everybody in China has got a house. Most people have got more than one house and wish they hadn't, I think, in many cases. And most people in China have got plenty to eat and drink. And therefore, the interest for us as investors is more in the service side. So we're talking e-commerce, we're talking travel, we're talking healthcare, all the things that, being fairly sophisticated, being fairly prosperous, they want to enhance their life still further. And so that's how we identify the sweet spots in each of the countries that we operate in. And just as an illustration of this, you can see how the e-commerce sector develops very quickly once people get to a certain degree of wealth. You can see that if you've got very good eyes, you can see that in China, in 2010, 2012, retail sales, e-commerce was only 7 or 8% of retail sales, but it took off incredibly quickly as people got mobile telephones, as the delivery system was in place, as the payment system came into place. As the country became more wealthy, it became easier for people to shop online, and now e-commerce is 35% of retail sales in China, an incredible number. And it's going the same way in India, in our view, very quickly. And has already started in Indonesia. So that's a very exciting opportunity. As I say, that as countries develop and as they get richer, we can exploit these opportunities to make a lot of money. And we made a great deal of money for our investors between 2013 and 2020 in the e-commerce sector. So what about China generally? I'm not going to spend a lot of time on the economy because I think you've had plenty of information on that. And it's very difficult to be optimistic about China. China is led, in our opinion, by somebody who has no interest in the business community, has very little interest in growing the economy in real terms, who is a pure communist. He's a Maoist, effectively. And he has demonstrated frequently in the last 5 or 7 years that he is not interested in the business community. In fact, he doesn't really like successful businessmen. So it's not a very promising background for us as investors. Added to which, we have also seen the huge implosion, disaster of the property market. The Chinese love property. It's been the basis of their economic model for a long time. Local governments sell land to developers. Developers build the properties, make good money, selling it to people who are moving to towns and cities, and so forth. And it's become a very big part of the economy, or was a very big part of the economy, and it's declining. Now, if you've got extremely good eyes on this chart, you can see in the faint lines behind is the growth in the urban population in China. And you can see the development completions, which is a dark line, is more or less kept up with demand. So supply-demand was pretty good, really, until about 4 or 5 years ago, whereupon it's fallen off a cliff. And this is an incredibly important determinant of people's consumption, people's demand, because it's just an incredibly important part of their assets. You must remember that China is a closed capital account. It's not easy to take money out of China. It's not easy to spend money overseas. And so people's net asset value, their family assets are, as you can see from this round circle, mostly composed of their property. It's incredibly important to them. 75% pretty much of their net asset value. And if that's going down, and it's gone down by about 40% from the peak, you don't feel very positive. You don't feel like buying a new car. You don't feel like buying your wife a handbag or whatever. So consumption in China has really crashed off a cliff. And it has been pretty difficult for us to make money in China the last couple of years. Having said that, you can see that the savings rate in China remains reasonably high. I think this chart is probably a little bit out of date and probably needs to show a decline. But people still do save money. They're very thrifty in China. They like to save what they can. But property is incredibly important. And as I say, if 75% of your family asset, main family asset, is falling, it's not good for consumption. So it's not a happy scene. However, it's not our job to be too pessimistic all the time. We need to find things that we can invest in, and we can try to make money for our investors. And one of the strong points of China is its export sector. It's perhaps, I would suggest, the only really powerful part of the China economy. They're very competitive. They make things very cheaply. They sell them across the world with great success. And you can see this red line, exports, China's export sector is incredibly strong and has become the real powerhouse for their economy. And so how do we exploit that? In our case, we do own a company called Midea. This may be a brand name that is quite familiar, even in Chile, because we see a lot of Midea washing machines and dishwashing machines and clothes washing machines and cookers in England as well. It's the biggest player in China. It's the number 1 or number 2 in pretty much every category. It's also still a very profitable company. It's doing exceptionally well. And it's exporting very powerfully around the world. And we own it in the portfolio, and it has made a very nice contribution already to our portfolio. The other thing too that is happening, a lot of people in China are not spending so much money on their property. They're not spending so much money on cars and that kind of thing. But certainly the younger part of the population is spending a great deal of money on travel and experiences. And this Trip.com is the largest online travel agent in China. So pretty much everybody, if they're going on holiday, booking a hotel, booking a train, uses Trip.com. And it's by far the largest player in the market, and it's a very successful company. And again, it's a core holding in our Aubrey Emerging Market Consumer Opportunities Fund. And then finally, one other, and you have these in Chile, and I'm sorry to say I can never remember the name. The fellows with the red baskets on the back of their motorcycles, and we'll hear the same in China, but it's yellow. And it's a very successful company. They started by delivering meals for restaurants, but now you can use their app to book all sorts of other things, from haircutting to deliveries for other things, and to make appointments, and even a little bit of travel as well. And it's the biggest player in that sector in China. And again, it's a very, very strong company, very, very well financed. All of our companies are extremely well financed and are definitely survivors, even if the economy continues to deteriorate from here. So that's finally, the final thing to say on China. Of course, it's been a terrible stock market. I mean, you can look at this graph and you can see that in the last 5 years, it has been really, really difficult to make good money in China. The yellow line is the valuations, which is the price-earnings ratio of the stocks in the market. And you can see that the valuations have declined in line with the market. And actually, at the current level, it is as cheap as it's been in 10 years, more or less. And so there are opportunities out there, and it's up to us to, as I say, maintain the positivity, to work hard, find the opportunities that are available. So, on to India. Well, let's end on a positive note, because India, I've just been in India. I was there for a week in September, and I came back incredibly positive. In our view, India has never been in a better place. This is a very complicated slide, I'm sorry. It is, but it contains a lot of very exciting information. It doesn't really matter whether we're talking about highways, railways, port facilities, electrification, sanitation. Everything has come up massively in the last 10 years, since Modi came to power in 2014. We have had over 30% of the fund in the Indian market since then, and currently we have 45% of our portfolio committed to India. But it has transformed the place. A lot of people say to me, in fact, it is the prevailing question, Indian valuations. Are Indian valuations not too high? Well, Indian valuations are at the top end of their 10-year range. We've got a chart later. But in our view, India has never been in a better place. So there's no especially good reason why they shouldn't be highly valued at the moment. So what are we focusing on here in India? The same story, the same consumer, anything that makes people's lives better, more convenient, more comfortable. GDP per capita is quite a good indicator of household wealth and incomes and people's ability to spend. And you can see at the moment it's $2,500 per head of 1.4 billion people. We'll talk about it later, but there's a big base pyramid where most people have got nothing to spend at all. But at the moment it's improving very fast, and GDP per capita is expected to double by about the year 2032. This is the pyramid I was talking about, and this is even more complicated than the first slide I showed you, and I am sorry. But what I'm trying to show you here is that the top 10% of the population, which is the top 130 million, I think, in that pyramid, they basically account for pretty much all, or the majority of the spending in the Indian market. I'm afraid my eyes aren't quite good enough to see what's under here. But the message is, what I'm trying to tell you, I'll try to make clear, it is that 150 million people account for most of the spending in the Indian market. But there's another cohort underneath, the next bit of the pyramid down, which is 400 million people who actually have now got some money to spend. They haven't got a lot, but they have got a bit of money to spend. But if the economy continues to grow at 7% a year, if they manage to keep inflation under control, there's a very, very good chance that 400 million people will start drifting upwards to the top of the pyramid and start to make a real contribution to consumption in India. And it's a very exciting prospect. Meanwhile, unfortunately, underneath that, there is about another 800 or 900 million people who are living mainly in the countryside who don't have very much at all. And that is a problem, long-term problem, that the Indians have got to address, but hopefully they will in time. There is a process of urbanization going on in India, but India doesn't do big cities in the same way as China does. I think what will happen in India is that the towns will get bigger, but they won't have the same massive cities that they have. As for opportunities, well, this chart here shows you where India, in orange, is in terms of organized retail. Organized retail means supermarkets, shops that we would be sort of familiar with in this part of the world or in England. India, the consumer is completely chaotic at the moment. I mean, lots and thousands and millions of small stalls, very small family-owned little stores. the opportunity for people to consolidate that, to modernize it, to make it exciting is something that we're very keenly observing and very keenly aware of, and we think is a very good prospect for us. The other thing is that the Indians are very, very keen savers and are fast becoming investors as well. There is now a large domestic fund management industry. Obviously, it is mainly that top cohort in the population who is doing it. But at the start of the year, there was $4 billion being pushed into the Indian stock market by Indian savers. And these are not speculators who come running in and running out. They have savings and investment plans, and so every month they're putting a certain amount in. And it's grown from 4 billion at the start of 2024 to about 6 billion now. I mean, it's a very, very good prospect. Funnily enough, meanwhile, most foreign investors have been selling India. Yes, you're good at tech. Oh, well done, sorry. Thank you. Sorry about that. And so, again, a bit like that last one I showed you in China, there are some really exciting opportunities as Indian retail matures and as it becomes more sophisticated. And Zomato, again, a bit like Meituan, which I showed you in China, started as a meal delivery service. They've now pushed it out into something called quick commerce, where people can order on their app. They can order eggs and butter and bread and yogurt, and it will be delivered to them in less than 15 minutes. What they're doing actually is that they are pulling together lots of the small family organized businesses that I talked about, and they are basically incorporating them into one larger store, and then using that, what they call a dark store, to provide the locality with their convenience retail. I mean, it's growing at an astonishing rate. It's very, very cash generative. It's very, very strong financially. It's doubled this year. We've taken a bit of money off the table, but it's still, in our view, a very exciting prospect. I mean, it's really only started. They've got 20 million regular users. I mean, it could roll out to hundreds of millions could use this over time. Varun Beverage is another one. Varun Beverage is quite a simple story. They sell Pepsi products in India. There are 27 Indian states. Varun Beverages have the franchise in all but one of those. Pepsi outsells India. It outsells Coca-Cola in India. It's the only country in the world where it does, because Varun Beverages have done a fantastic job. We've owned this stock for about 7 years. I think we've made about 6 times our money on it on our original purchase, and we've taken money off the table as it's gone up. They are actually moving into Africa, and you might think that's a terrible thing to do, very risky, very difficult. But Indians have an incredibly good track record of going to places like Africa and making a great success of it. They're pretty good at operating in what one might call a harsh environment, certainly a harsh business environment. They're taking over existing franchises and modernizing them. And finally, the one that I think is perhaps the most exciting of all is that India is becoming wired up. Everybody in India nowadays has a telephone. It's not a luxury, it's becoming a necessity. Whether you are a Zomato motorcycle driver or just a customer for pretty much everything, that e-commerce retail slide that I showed you earlier is just starting to move northwards in India. And 5 years ago, there were only 200 million mobile telephones in India. Not many of them were smartphones. Now there's 800 million. It's growing at an incredible speed. And the other thing that's growing is the broadband network. I mean, Indians are starting to understand businesses linked to broadband, streaming of entertainment, broadband to the home. Bharti Airtel has spent a huge amount of money buying spectrum, building out towers. They have 400,000 towers around India. They have 300,000 miles of fiber network, and it's now generating $5 billion of cash per year. It's in a position to pay its debt down extremely quickly, and it's a really, really exciting story in my view. And as data in India, by the way, costs $2 a month. It has to cost $2 a month because most Indians couldn't afford any more than that. But as they get more used to it, and as they start using it more, and as more and more of them go onto monthly packages and broadband to the home, the usage per user, the revenue per user is going to go sharply higher. So that's it. We're very optimistic about India. Please take that message away. As I said earlier, everyone talks about the valuations of India, and here is the 10-year price-earnings ratio in yellow of the Indian market, and underneath is yellow. Underneath the yellow line is the white line for the market itself. I mean, there have been times in the past when the market has looked quite expensive and it's had a pullback. Equally, there have also been times in the past when the market has looked quite expensive and you might have thought it's time to sell, but you might have missed an enormous opportunity. I mean, in fact, exactly this time last year, you can see that the yellow line is nudging up against the red line, but the market itself rose, and the valuation actually fell back, and that was because the earnings growth in the Indian market was faster than the stock market price action, the stock prices. It's a very, very good story, and it's, as I said earlier, 44% of our fund. Some people have been saying to me, well, the market has fallen back a bit, what are you going to do? I think it's a great mistake to look at India on the short-term view. I think you've got to try to understand as best you can the long-term opportunity of 1.4 billion people who want to get up in the world, who want to make a better life for themselves and for their families, and to do all the things that most of us here take for granted and use every day, and not be too short-term in terms of valuations. So that's, I think, the end of my presentation. Thank you.